In this presentation, we will create a purchase order with a new inventory item. In other words, we will create a purchase order requesting inventory, in our case, a guitar from a vendor. As we set it up, we will set up a new inventory item through the process of entering the data into the purchase order within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars problem. We're going to enter a purchase order. To do so, we will select the plus item up top. We're going to remember our process as we enter the purchase order. We're on the vendor side of things. We ultimately are selling guitars. We are selling inventory. We need to purchase that inventory from a vendor, and then we're going to have it in our store. We're going to then sell that inventory to customers. In order to purchase the inventory, you might think that we would just purchase from something like Amazon or a wholesaler of some kind, and we can order the inventory and possibly, as we do normally, make the payment as we order the inventory, as we might do if we were to purchase something from an online retailer or something like that. However, in a larger business, oftentimes we have more power, more authority, and we're able to say, hey, I would like you to ship me the inventory first. We'll check it, and then we'll make the payment once we receive the inventory. In that case, we would use the purchase order. It's just a request. The funny thing about the purchase order, remember, no journal entry related to it. It's us saying, hey, we need a guitar or multiple guitars from a particular vendor because we need to sell them. We're requesting these guitars from the vendor with the purchase order. We're asking them to send them to us. Once we receive them, check them, see that they tie out to what we want, we then make the payment to them. Therefore, no transaction with the purchase order. So we're going to select the purchase order, and we're going to have a new vendor that we're going to be purchasing from. So we're going to say that someone was requesting guitars from someone other than our normal vendors, which is Epiphone mainly. And now we're going to say the new vendor is called Fender. So Fender is a guitar vendor. So Fender the vendor. So we're going to have Fender is going to be our new vendor that we're going to purchase from. We're going to send them a purchase order. So we'll type in Fender. We're going to add that vendor. Remember that if Fender is going to be a large vendor that we purchase from a lot, we might want to add the detail from them, giving us all the contact information, making sure we have a good relationship with our large vendors, unlike if we're paying the phone bill or something like that, where we really just need to know the contact information. But in order to make the purchase order, we just need the contact information, the vendor, the Fender name. So we'll keep that for now. We're going to say save and continue. No email address that we're going to set up at this time. Mailing address is going to pull forward from what we have entered. We've only entered the name. That's what we have then. We're going to say that the ship to address will be that same Get Great Guitars. So we'll keep that as is. The date, I'm going to select the plus on the computer to bring this up to February 9th, 2019. Then we're going to go to the items down below, not the categories, but to the items. We're purchasing an inventory item. Typically, we would select the drop-down and find the appropriate inventory item, but we've never purchased from Fender the vendor before. So we're going to have to add the inventory item. It's not here. We could go to the items, the products and services, and add it there. However, we can also add it as we enter the information into the purchase order. To do so, we're going to enter the name. So we're going to say this is going to be an SQ. So we'll call it an SQ for short. And we will say tab, and we're going to add this to our inventory items. We're going to say it's going to be an inventory type item. So that's what we will select here. We're going to say that as of now, the quantity on hand is 0. So we don't have any as of this point in time. We could say that this point in time is the current date. I'm just going to make it as of the beginning of the year, 01/01/19. So we don't have anything at this time. We're not going to enter the reorder point here. That would be the point at which the inventory is down to the point where we want to buy more. Note that these two fields are required because of the asterisk. This one is not. We're going to scroll down then. We've got the inventory asset account. This is the asset account that's going to record the cost of the inventory when we purchase the inventory, when we make the payment, not now, but when we actually make the payment for the inventory or record it on the books when we receive the inventory. So that's going to be in inventory asset. And then we're going to say that the sales information is going to be a Squire. So that's going to be the type of guitar we have, Squire guitar. The sales price we're going to say is the 244 is going to be the sales price. It's going to go to the account when we sell it, an income account. It's going to go to the income account of sale of product and service. This amount and this account, of course, will not happen with this purchase order, but when we create sales receipts related to this inventory item, then it will be recording to that account, the income account and the asset account as well. And then we're going to say the sales tax category, we will say that it is the retail, and we're just keeping with the convention that we have. And so there is sales tax. It's going to be a taxable retail item, so it is something that we will be paying taxes on, sales taxes on. The purchase description is also going to be a Squire. That's the type of guitar that we are purchasing, our inventory item. The cost is going to be $168. That'll be the cost. And the cost of goods sold account, this is the account that will be expensed when we sell the guitar. Again, not now, not during the purchase order, but anytime we sell this type of guitar, it will record the expense of the cost of that guitar to the account of cost of goods sold. So then we'll save and close. We're going to say that this purchase order was made for a particular customer. So the customer came into the store and said, hey, I'd like this particular guitar. We're going to say, hey, we don't have that guitar. We don't even purchase from Fender, but that's okay. We can call vendor. We can send them a purchase order and see if they will send us that guitar. And then we will get the custom order for you, give you that guitar. So we're going to say that the customer is going to be New Music Stuff. So that's our customer name, the store that basically wants the guitar. So we're going to say New Music Stuff. That's who we're going to sell from. This purchase order is a request to the vendor we want to buy from. So we'll select tab. Again, we probably would want the details if it's a customer to give all the details of the customer so we can send them our newsletters and whatnot. But we're just going to keep it as this for now. This is going to be the information to be allowing us to tie out the purchase order to the receipt of the inventory and ultimately the billing of invoicing or sales receipt. So we're going to say save. And here we have it. Here we have our transaction. Now remember, this is a form, and let's remember the journal entry behind this form. Once we create this, we have this dollar amount here. What is QuickBooks going to do to the financial statements? Nothing. There's no transaction related to this form. This is an informational form saying, hey, we're requesting this guitar. We're not making a payment. We didn't get the guitar, but we have this dollar amount. This is what we expect the guitar to cost, our request for it. If you ship us that guitar, we will then make the payment for it. So different type of form here, this purchase order. It doesn't have any kind of transaction related to it, unlike most other forms, just about all other forms typically. So we're going to say save and close with this form. Now we can take a look at that transaction. We can check out that transaction. We can't do it on the forms, on the financial statements, we should say. However, we can go to the expenses tab on the left side. We can go to our vendors tab up top, and we can look for that new vendor that we set up called Fender. Fender's the company that we set up, our vendor, Fender. If we select that, then here is the purchase order. So we have the purchase order. We can send it from this screen. We can select it, and we can see what has happened with the purchase order, which customer we are applying that purchase order to, who we will be billing with an invoice or sales receipt once we have received this guitar. Now we're going to do this again. I'm going to close this out, and we'll make another purchase order. So we're going to go up top to the plus item, vendors, and we're going to go back to that purchase order. We're going to make another purchase order, this time to a vendor we already have, our main vendor, that being Epiphone. So we could select the drop down and find Epiphone, or we could just start to type in Epiphone, our major vendor. No email address. The mailing we're going to keep the same, as well as the shipping. The date is going to be the 9th as well. We then go down to the items here, and you'll see that's already populated. And that's because QuickBooks is trying to help us out. It's saying this is what you ordered last time. Maybe you want to order this again. And they're right here. They're going to say, yeah, we do want an ELP. That's what we want to order. That's kind of like our main or default guitar. And we're going to order an ELP. We're going to change whatever we need to change here. We're going to say the ELP is what we want. The quantity, however, we're going to change to 3 of them. We're going to order 3 of these items. And the amount then is 400 each. So that amount will be 1,200. This time we're not going to include a customer. So we're basically imagining here we have our store, we have our stock ELPs. Those are the ones that we sell most within the store. We want to have them on stock in case someone comes in, would just like to purchase that particular guitar. and therefore we want to order a few of them. We are not going to assign them to a particular customer as we've seen in the past. This isn't a custom order. We're not ordering the guitar just to give it to someone who had some specific order about the color or something of that in the guitar. These are going to be the ones in the store we can demonstrate and we can sell at the point in time within the store. So we're going to save and close that item. Once again, no transaction related to it. If we go to the expenses tab, however, and go to the vendors, then we can see, of course, our major vendor, Epiphone. Selecting Epiphone, we can see that purchase order that is now currently outstanding. If we select it, we can see that item. We're going to use these purchase orders to tie into the receipt of the inventory and the payment of the inventory, and where applicable, to the customer, to the sale in the form of invoice or sales receipt. For more accounting information and accounting courses, visit our website at accountinginstruction.info.